CNBC-TV18, embarking on a quarter century of excellence.
Today we focus on some banking and finance stocks. First up is the 30% fall in Paytm shares, 197 Communication, after the company said it will reduce small ticket loans of under 50,000 rupees. This follows, of course, the Reserve Bank raising risk weights on unsecured loans. Secondly, the big news in BFSI, Bank of India has stormed the QIP market with a 4,500 crore QIP issue, which has been subscribed 4.11 times, leading to a steaming rally in PSU bank shares. The list will come up for you. Already they are up about 30 to 50% year to date, but month to date, all of them have been seeing about 9 to 10% gains. That's the month of December. To examine all these three sectors, fintech lenders, NBFCs and PSU banks, I have with me Karthik Srinivasan, Senior Vice President and Group Head Financial Sector at ICRA, and Digant Haria, the co-founder at Green Edge Wealth Services. Thank you very much, Karthik and Digant, for joining us. Digant is also, in his previous avatar, a renowned expert on the financial sector, BFSI space. So, Digant, let me start with you on Paytm shares. The company made it very clear in the conference call that they're moving out of small ticket loans, but they will redouble their efforts on larger personal loans. But the market has given it a severe punishment. Do you think all the bad news is in the price?
I think a lot of the bad news is in the price, Lata, because see, Paytm does not have its own balance sheet. Okay, Paytm is dependent on, borrowing the balance sheets of players like, say, an Aditya Birla Capital or a Hero FinCorp or an IDFC Bank. And after the RBI diktat, it is only natural that those partners will say, hey, there's a lot of risk in BNPL and, let's go slow on the BNPL. So even if Paytm's own BNPL portfolio did not have a lot of problems, they are forced to slow down. So I think this is a risk associated with the asset-light model, that you don't have a choice when to grow or when to scale down your book. I think it's fair on Paytm's part to go slow because, the regulator has said that there are a lot of other small players who are not doing the right things in the sector. So it's fair, but I think Paytm is getting unduly punished for this. And I think, this punishment, in my view, only ends when it can have some of its own balance sheet, which is when it either applies for an NBFC license or an SFB license.
But is it only Paytm as a fintech which is impacted among the listed space? Not a similar problem for any other NBFC or fintech?
So see, Paytm is, directly impacted in a large way because it has huge presence in this unsecured lending segment, okay, which is the BNPL, unsecured personal loans and unsecured business loans. See, a lot of other NBFCs also do get impacted to a smaller extent. Someone like, say, a Fullerton or an Aditya Birla Capital, a lot of their growth came out of, the growth of Paytm. So those guys do get impacted, but see, they are more diversified. They can find their way around by growing in some other sectors. So, yeah, Paytm is the most impacted one.
Okay. Karthik, what's your sense? Paytm, a pure fintech lender, as Digant says, with lending out of other people's balance sheet is affected. But do you see any other areas, especially NBFCs, getting severely impacted?
Good morning, Lata. As Digant said, a segment where we clearly see some slowdown happening is the unsecured loan segment, driven by a couple of factors. One, last 2 years has been good, that this segment has seen significant growth, with larger players, with banks also looking at these segments to improve their overall margins and profitability. And also the India stack, which has helped them scale up quite smartly over the last 2 years. Now, with this regulations, we believe banks, NBFCs, fintechs are all reevaluating their strategy with respect to the business model. So till the time there is some clarity, we would see some slowdown. Entities which are specifically onto unsecured small ticket lending, possibly the slowdown could be more pronounced out there. For other players which have a fairly well diversified portfolio, yes, you would see some slowdown, on disbursement numbers with some of these entities disclosed every quarter. But at a portfolio level, the slowdown may not be that pronounced. But clearly, with RBI not only increasing the risk weight on unsecured loans, but also on lending to NBFCs, we believe that the funding to NBFCs could slow down, or in other words, bank may become a bit more choosy in their NBFC counterpart, which could lead to an overall slowdown in the NBFC AUM growth over the next 12 months.
Okay. Digant, any stocks you would pick out which could be impacted more than others in the NBFC space?
See, it should, I think the most impacted one obviously will be Paytm. And I think
besides that.
Besides that, Lata, I don't see a very large impact on all the traditional lenders, lenders like, say, a Shriram Finance or a Mahindra Finance. A lot of them, started doing personal loans, but it is so small, Lata, that, it's very difficult.
That will not get impacted. They will get impacted because their loans from banks, as Karthik said, becomes expensive.
Yeah, but that's, the whole system gets impacted, so it eventually gets passed on to the borrower. Okay. So if somebody was saying, see, this is the first time RBI has done activity-based regulation. RBI has not made any differentiation between a personal loan given by a bank or an NBFC. So I think that activity-based regulation impacts everyone, and everyone's funding cost goes up by, say, 20 pips. That gets passed on to the borrower. If it was just two players, it's difficult. But I think, I don't see a system-wide impact on everyone.
Okay. Well, it's not the first time they've done activity-based risk weights. This was the fashion between 2004 and 2008. Real estate lending, likewise capital market exposure, all those risk weights came in at that time. This is second avatar of macroprudential guidelines. Karthik, now to the other big one that has shaken the market in a positive way. Bank of India has come in with an eminently successful QIP. And we understand now our expert on the subject, Nimesh, has broken a couple of other banks which are lined up today and later on this week to raise QIPs. Does this mean a new lease of life for PSU banks? They're going to have more capital, and therefore, will you up their expectations of loan growth?
I need to just step back a minute out here. If you just look at the last couple of years, PSBs have had their set of challenges. Over the last 2.5 years, we've seen significant cleanup in the PSB balance sheet. Their capitalization profile has improved, and even the core operating profitability has improved quite sharply for most of them. So on the back of that and a conducive capital market environment, we have seen a couple of banks do equity raise, non-governmental equity raise. So from that point of view, it's definitely a good news that Bank of India has had a fairly successful QIP recently, and that clearly paves the road ahead for others also in case they decide to go on that path. Now,
Karthik, my pointed question is: everyone knew the cleanup, and all that was priced in. We are just showing the year-to-date gains. All of them have gained between 30% and 50% because this cleanup was known. But now, I didn't expect a spate of QIPs. One has started, two are following this week. So do you upgrade loan growth expectations or anything else?
Loan growth expectations would be difficult. One needs to also look at it that last 2 years, the banking system has grown at a fairly fast pace. And incrementally, if you look at the CD ratio is also pretty high. So unless the deposit base really goes up, it'll be very difficult to significantly upgrade on the loan growth for the system. Plus, the RBI regulations, effectively shaves off about 50 to 100 basis points of an overall systemic growth rate. So one needs to just put things in perspective. Another thing which I would say is more than the growth rate, which should be more or less at similar levels, hopefully. ECL norms for banks are also around the corner. RBI hasn't set a date, maybe a year down the line or 2 years down the line. So it would be good that banks are actually much better prepared before that eventually kicks in.
Okay, what's your, let me toss the same thing to Digant. Digant, were you expecting this kind of capital raising by the PSU banks? I thought that was not factored in. Several other positives were. This makes their balance sheet healthy, even if not immediately making them, higher in the race for loan growth. How do you approach the space?
So, Lata, this PSU banks, I was expecting a spate of QIPs because, see, the government shareholding had gone to very high levels. In some banks, it is almost 95, 96% if you take LIC also together. So they had to come down to 75% someday. So now seeing these good capital markets, I think, Union Bank did a QIP. Now Bank of India has come for a QIP. I think they are also capitalizing on this boom. And they want to get their shareholding down to 75%. But I was really not expecting 4 times oversubscription. The excitement which I see around the PSU banks, that is really a surprise to me as well. And with this large capital, the natural inclination is to say, okay, now they can go out and grow. But, if we look at PSU banks, the 2 growth engines were lending to NBFCs and lending to retail. Especially a lot of people were starting about the retail thing. Now, both these engines have been, put a break by RBI to some extent. So upgrading the loan growth guidance, it does not look very easy. The only hope is that after elections, the corporate loan growth revives in a meaningful way. And that is when the growth guidance in these PSU banks go up. And that is when the re-rating happens. See, PFC, REC gave 1 quarter, 2 quarters of 20% growth and see how the stocks got, re-rated to levels we've not seen for decades. I think the same goes for the large PSU banks. They have to somehow give the confidence of more than 10% loan book growth, and then we'll, really see these valuations.
But you don't have any pick in the pack? Any pick in the pack?
No, so, all of, there are a lot of picks in the pack, Lata, but it's just that, we're waiting for the growth lever. Everything is fine, Lata. The asset quality is fine, profitability is fine, capital is fine. Only missing piece is the loan book growth. Once it comes, you see the valuations improve very meaningfully for them.
Yeah, as Karthik said, one should watch for the deposit growth as well, which also has been a far second to other maybe private sector lenders. Thank you very much, Karthik and Digant. Run out of time, not run out of questions. So probably there is something big waiting to happen in the PSU bank space. The rally also coincided with the 3 major states returning BJP governments. That also means that reassures a confident BJP government in 2024 in June, or at least that's the interpretation of the market. And that could mean some seminal changes in corporate governance, maybe some privatization for the PSU bank. So there's a whole gamut of things that's pushing up, but people are just waiting for things to happen. Maybe there's a rally here. We wrap up on Bazaar. On that note, Chartbusters coming up next.
CNBC-TV18, embarking on a quarter century of excellence.